Most XLM holders are waiting for a signal, a big announcement, a price move that confirms they were right, a mainstream headline that finally validates what they have been holding through. And while they are waiting for that signal, while they are checking the chart and refreshing their portfolio and reading the same community threads, the signals that actually matter are already arriving quietly, instantly, in categories that the crypto community does not typically watch, in deployment patterns that look nothing like what retail participants have been trained to recognize as important. This video is about two of those signals, not price signals, not ETF signals, not whale wallet signals, something more specific and more revealing than any of those. The kind of signal that tells you not just that the thesis is intact, but that it is expanding into territory that changes the scale of what XLM is actually becoming. And then at the end of all of it, I want to ask you one question, not about price, about time. Let's start with the one that most of this community missed entirely when it dropped. And I do not mean missed as in did not see the headline. I mean missed as in saw the headline and did not understand what it was actually saying about where Stellar is in its adoption curve. AllUnity and Zebic launched regulated URSTBCO IOIN pay on Stellar, live in production, right now. Regulated URSTBCO payroll. And I want to break that down word by word because each one matters more than the community has processed. Regulated. This is not an unregistered stablecoin operating in a gray area or a DeFi experiment running without oversight. AllUnity is a regulated entity operating under European financial regulation. The Euro stablecoin it issues on Stellar is subject to the MiCA compliance framework, the same framework that defines which digital assets European institutional clients can access through regulated infrastructure. Regulated means employers, payroll processors, and corporate treasury departments can use this product without triggering compliance risk for their own operations. That is a completely different adoption dynamic from a DeFi protocol launching a new yield product. This is payroll compliance infrastructure, the most institutionally mandated, most legally scrutinized payment function that any corporation runs. Euro stablecoin, not USDC, not USDT, not a dollar-denominated stablecoin that introduces foreign exchange exposure for a European employer paying a European workforce, a euro-denominated stablecoin on Stellar rails. The Eurozone employs approximately 160 million people. Every employer in that zone who wants to run payroll through this infrastructure is settling in euros in a regulated instrument in seconds on Stellar rails. Every single one of those payroll transactions generates XLMP demand, not speculative demand, not trading demand, payroll demand, the most reliable recurring transaction category that exists in any economy. Payroll. And this is the word that changes everything about how you read this signal. Payroll does not stop when markets are bearish. It does not pause when the fear and greed index hits extreme fear. It does not respond to whale alert notifications or MVRV ratios or Bitcoin dominance climbing. Payroll runs because people need to be paid and employers are legally required to pay them. It runs on the 1st of every month, regardless of what XLM's price is doing. It runs during corrections. It runs during bear markets. It runs through macro headwinds and regulatory uncertainty, and every other condition that suppresses speculative transaction volume. And it is now running on Stellar. That is the first signal. Recurring, legally mandated, sentiment-immune transaction volume landing on Stellar rails as a production deployment, not a pilot. Before we get back into today's video, I just want to take a moment to say thank you to all of my subscribers. I truly appreciate every single one of you for your support, your likes, your comments, and for sticking with the channel. It really does mean a lot, and it helps this channel continue to grow. Now, it's time to give a shout out to our subscriber of the day, Dwight Jones. Thank you so much for subscribing, Dwight. I really appreciate your support, and I hope you're having a wonderful day. If you're enjoying this kind of content and haven't subscribed yet, go ahead and hit that subscribe button. It really helps out the channel, and I'd love to have you along for the ride. Now guys, look, if you've been rocking with this channel for a minute, you know my number one rule. Zero paid promos. Zero sponsorships. I fiercely protect this community. If I'm talking about a platform, it means my own hard-earned cash is sitting in it, and I know exactly how the engine works. Today, I'm pulling back the curtain on a wealth-building machine that's given me absolute peace of mind for over 2 years. Let's talk about GCRIG. I first crossed paths with the GCRIG crew face-to-face at New York Fest. After a buddy I trust with my life walked me through their ecosystem, I was instantly hooked. Why? Because GCRIG absolutely dominates the arbitrage trading space. If you're not familiar with arbitrage, look it up. But the short version is this. It's about spotting those tiny split-second price gaps across global markets and capitalizing on them before anyone else even blinks. But here is where GCRIG leaves the competition in the dust. You aren't the one glued to a monitor, stressing over red and green candles all day. They run a relentless, cutting-edge AI, seamlessly powered by the CRB network. This thing does not sleep. It scans the global markets 24/7, deploying your capital with surgical precision to hunt down the absolute best returns, all while you're sleeping, at the gym, or spending time with your family. As investors, we're all chasing that holy grail, maximum growth with minimum stress. That's exactly why GCRIG is the undisputed bread and butter of my passive strategy. Here's how the math works in your favor. You get the exact, consistent profit rate you signed up for. The system keeps whatever excess it generates on top. That's their cut, and they only charge a microscopic, flat 1% withdrawal fee on your earnings. It's clean, fair, and incredibly straightforward. You also don't need a Wall Street pedigree to figure this out. The platform is phenomenally user-friendly for absolute beginners. Plus, as of this year, they fully accept digital assets. Funding your account with crypto makes the whole process lightning fast, completely frictionless, and 100% borderless. Guys, it's time to stop letting your capital sit idle in a broken, traditional system that isn't working for you. GCRIG has given me the ultimate luxury, time, and total financial confidence. If you're tired of the guesswork and ready to let elite AI do the heavy lifting for your wealth, it's time to take the wheel. Don't just watch the market move. Let your money move with it. All right, with that said, let's get back to today's topic. The 99% of XLM holders who saw that headline read it as another partnership announcement. The 1% understood that recurring structural volume is a fundamentally different demand driver from institutional asset, custody, or tokenization partnership announcements, because it does not stop. Now, the second signal, and this one connects to the ZBIC ecosystem we have discussed before, but it surfaces something that was not visible when we covered that story. And that changes how you should be reading Stellar's position in the global payment infrastructure landscape. The stablecoin supply on Stellar has reached $877 million. The TVL has hit a record $244 million, and the RWA value on the network crossed $3 billion in the first half of this year and is continuing to compound. 3 specific numbers, all records, all in the same window. And together they tell you something about the network's trajectory that individual announcements cannot. Here's the thing about those 3 records that the community is not discussing properly. They're not moving in the same direction because of a single catalyst or a single institutional partnership. They're moving together because Stellar has crossed a specific adoption threshold where multiple independent use cases are compounding simultaneously. The stablecoin supply is not growing because of Franklin Templeton. The TVL is not growing because of the DTCC integration. The RWA value is not growing because of Clearstream custody. Each of those numbers is being driven by a different set of participants, pursuing a different use case on the same infrastructure. And when multiple independent use cases start growing at the same time, it means the network is no longer dependent on any single adoption narrative to sustain its momentum. That's what the 99% are missing when they look at those three record numbers. They are not seeing one story three times. They're seeing three different stories simultaneously creating the conditions for a fourth. The fourth being the market, finally pricing what the network actually become. Not a payment network with a tokenization feature, not a tokenization platform with payment capability, but a genuine general-purpose settlement layer that is processing stablecoin payments, DeFi activity, and tokenized real-world assets at record levels at the same time. General-purpose settlement infrastructure gets valued very differently from specialized financial infrastructure. This is the repricing argument that nobody in the XLM community is making clearly. Swift is general purpose. Visa is general purpose. The networks that handle everything, security, settlement, and payroll, and humanitarian disbursements and stablecoin transfers, and tokenized asset management are the networks that become foundational. You don't need to reach Swift scale to get a Swift-like market cap re-rating. You need to demonstrate that the infrastructure can handle the full spectrum, and that multiple independent institutional participants are choosing it for different parts of that spectrum. Simultaneously, the stablecoin at $877 million, the TVL at $244 million, and the RWA at $3 billion in the same window. Is that demonstration happening in real time? And now, the third signal, the one that arrived on July 20th, 2026, the one that didn't belong in the financial services category at all. And that is why most of the community missed what it actually meant when it dropped. The United Nations Development Program expanded its humanitarian aid payment partnership with Stellar. The UNDP, operating in approximately 170 countries, managing billions in annual program expenditure directed at some of the most financially excluded populations on Earth, is using Stellar to streamline blockchain-based humanitarian aid distribution globally. Not a pilot, an expansion of an existing partnership. The UNDP already tested this, already confirmed it worked, and now has decided to scale it. The category of adoption this represents has never appeared in any previous analysis of XLM. In this series, every institutional name we have discussed, Franklin Templeton, Clearstream, the DTCC, MoneyGram, All-Unity, Zebic, US Bank, sits in the financial services category. Banks, asset managers, payment processors, settlement infrastructure. These are all variations of the same theme. Traditional financial institutions adopting Stellar because it's faster, cheaper, more compliant, and better structured for the regulatory environment they operate in. The UNDP is not a financial institution. It's a supranational humanitarian organization, using Stellar not to generate yield or reduce settlement costs or comply with MICA. It's using Stellar to get money to people who have no bank accounts, no credit history, no access to traditional financial infrastructure in the middle of humanitarian crises where traditional payment rails either don't exist or have been disrupted. That's not the ISO 2022 story. It's not the tokenization story. It's the access story. The story that Stellar's original thesis was built around before any of the institutional financial services adoption existed. Stellar was designed for financial inclusion before it became a financial institution adoption play. The UNDP expansion is a signal that both stories are running simultaneously. The most sophisticated Wall Street tokenization infrastructure story and the most basic humanitarian cash transfer story are both being carried on the same network at the same time. That's not a coincidence. It's the product of an architecture that was designed from the beginning to be fast enough, cheap enough, and compliant enough to handle a full spectrum of legitimate payment activity. The TAM implication of this third signal is the most important thing to understand about where XLM is right now. Development finance moves trillions of dollars annually. Humanitarian aid disbursement is a multi-hundred billion dollar annual flow. Government program payments, social protection, conditional cash transfers, agricultural subsidies represent some of the highest volume, most underserved payment corridors on Earth. The UNDP expanding its stellar partnership means those corridors are inside the thesis now, not as a future possibility, as a present operational reality. The market has priced none of it into XLM's 18 to 19 cent price. Now, here's how you get ahead of 99% of XLM holders given what these three signals are actually saying when you hold them together. The payroll rail signal, all Unity and Zebic on Stellar, tells you that recurring, legally mandated, sentiment immune transaction volume is now compounding on this network. It does not stop when the chart looks bearish. The three simultaneous records: stablecoin at $877 million, TVL at $244 million, and the RWA at $3 billion in the same window to tell you that multiple independent use cases are compounding simultaneously. The network is no longer dependent on any single adoption narrative. It is becoming general purpose. The UNDP expansion tells you the TAM is larger than the financial services thesis alone. Development finance, humanitarian disbursement, and government program payments are inside the thesis. Now, the scale of what Stellar can eventually price as is bigger than anyone in the community has been modeling. Three signals, three different categories, all pointing in the same direction, all arriving in the same week, all at 18 to 19 cents. The 99% see 18 to 19 cents and feel the weight of an asset that has not moved the way they hoped. They see the chart testing the 20 to 20.5 cent resistance zone that analysts have flagged as the key level to watch. They see the fear and greed index at fear. They see Bitcoin dominance keeping altcoin capital rotation suppressed. And they wait for a signal, not realizing the signals arrived while they were waiting for them. The 1% sees these three signals, and they understand something specific that changes how they read the 18 to 19 cent price. They understand that the price is a lagging indicator. It always has been for infrastructure assets. The payroll rails went live before the price reflected it. The simultaneous records hit while the price was consolidating. The UNDP expanded while the chart was testing support. The signals arrive first. The price follows, always in not order, never the reverse. Getting ahead is not complicated. It does not require access to institutional research or proprietary data or community insider knowledge. It requires reading the signals that are already public in the UNDP press release, in the All-Unity ZBAC payroll rails announcement, in the on-chain data showing three simultaneous records, and understanding what they mean before the broader market prices them. That is the entire advantage, not information access, interpretation speed. The specific thing the 1% does with that interpretation is not a secret strategy either. They do not wait for confirmation. They do not wait for the chart to validate what the fundamentals are. Showing they do not wait for the community to reach the same conclusion before they act on it. They position based on what the signals say, because by the time the price is saying it, the position has already been built by the people who read the signals first. And the waiting room between the signal and the repricing, the uncomfortable, frustrating, chart watching, community thread reading period, where everything in your environment is telling you the signals do not matter because the price is not responding. That waiting room is the price of admission to the position that captures the repricing. The 1% knows what it is. They've been there before, not with XLM specifically, with every infrastructure asset that eventually got repriced after the adoption crossed the threshold where the market could no longer ignore it. The question is not whether the signals are real. The payroll rails are live. The records are on chain. The UNDP expansion is documented. The question is whether you read them before the market prices them or after. This video is for educational and informational purposes only. Nothing here constitutes financial, legal, or investment advice. Always do your own research and consult qualified professionals. Now our professions. If this video showed you signals that you were not watching the all-Unity Zebic payroll rails, the 3 simultaneous on-chain records, and the UNDP adoption category expansion, and it changed how you are reading XLM's position right now at 18 to 19 cents, please smash that like button. Because the holders who are going to act on these signals before the broader market are the ones who saw them first. The like puts this in front of them. Subscribe because this channel watches the signals that the 99% are not watching. Not the price, not the chart, but category expansions and the structural transaction volume signals that tell you what the price is about to price in before it prices it. That is the edge this channel exists to provide. Here's the question I want in the comments. Not about price, not about which signal is bigger. One specific question. How long have you been holding XLM? Not how much. How long? Because the answer to that question tells me everything about whether the waiting room has tested your conviction yet, and whether you're in the 1% that reads signals or the 99% that waits for confirmation. Drop your holding period in the comments. I want to see who is actually in this waiting room and how long they've been there. Have a great day. If you enjoyed this video, don't forget to like, subscribe to the channel, and be sure to join my free Telegram community with the link on my channel where I post my daily crypto experience and arbitrage opportunities you can't get anywhere else. This is XRP Cober, signing off.